Welcome to the channel, guys. This is one of those videos where I will be breaking down my trading strategy to the latter using the buy trade I recently caught on volatility 25 1S index right here. Well, as you know, I am predominantly a swing trader. What I like to do is go on the higher time frames, like the weekly and the daily time frames, where I get the directional bias. Afterwards, I scale down to the lower time frames, 4 hourly, the 2 hourly, the 1 hourly time frames, and beyond for trade entry execution. Very quickly, from the daily time frame perspective on volatility 25 1S index, we were pretty much in a downtrend. And then we had shifted from a bearish market structure to a bullish market structure. And this is the very very movement that shifted the market structure from bearish to bullish on the daily time frame perspective. Safe to say, looking out for buy setups and potential buying opportunities would be higher probability trade opportunities. Like it's best to trade in line with the trend. So clearly we had shifted structure from bearish to bullish from the daily time frame, as you can see right here. And then we had price made some form of pullback. And this is the very move I caught on volatility 25 1S index. Very briefly, in the next couple of minutes, you'll get to see the exact reasons as to why I caught the buy trade in line with this price rally here and my exact entry. So upon this retest of previous market structure, what I noticed was the fact that we're bringing our fib retracement from daily swing low to the most recent swing high right here. But notice what? Price had nicely come into the 61.8 Fibonacci golden reversal level. I always like to look out for continuation patterns in line with the trend right at the 61.8 fib level, depending on the kind of price actions I get to see when once price gets to this level. So very clearly we're coming to the 61.8 Fibonacci reversal level. And then also, just right at the level, there was something very right at the level also, we previously about to see price reacted on several occasions upon reaching the very level. Then we had psychological round number present at the level. So you can see previously looking to the left, we had this sell-off coming to the level, and then what price held the level from getting past, acted as a support right here. We came into the level a second time, acted as a support. And then here, when we were below the level acted as a resistance. So this is a key level, as you can see very evidently and very obviously. We're about to react for every time we came right into the level. So yeah, the very level where we are previously identified using the Fib retracement tool being the 61.8 Fibonacci reversal level aligns very perfectly also with a daily area of interest. Area of interest being the fact that what? It's a key level, as you can see. 1, 2, 3 on 3 different occasions, price had bounced off from the level upon testing. Also coupled with the fact we have ourselves around psychological number right at the level. And then also confirming the potency of the level was the fact that what we started seeing what shift in momentum. Now, guys, this is where you want to pay attention to the price action. When once you have been able to identify an area of interest and then price trades back to your already identified area of interest, you want to pay attention to the price actions at the retest of your area of interest. So as soon as you came into the area of interest, you would notice a shift in the momentum. Why? Very clearly, take a look at the last 3 candlesticks when we were retracing into the level. 1, 2, 3, you can see we had 3 days of very bearish pressure upon retracement into our area of interest. And then as soon as we got into our area of interest, we started seeing the very next candlestick after 3 very bearish candlestick closes. We can see right here, we have ourselves an indecision candle, a rejection from the downside, giving us an indication that the selling pressure is most likely coming to an end. As you can see, we had the next candle also close a bit more bullish than the previous one, even though this is very clearly an indecision candle. And then we had the third daily candlestick close also as a rejection candlestick. And now, if you have been following my previous videos, you know very well the rejection candlesticks is one of my preferred or reversal candlestick pattern. Indeed, this tells us that what sellers were trying to move the market, and then buyers stepped into the market, pushing price back to the upside. And then you can clearly see how the momentum shifted very quickly from 3 days of very bearish pressure to 3 days of indecision candlesticks with more rejections from the downside. And this being a buyer's zone, clearly the buyers rejecting sellers from taking price anyway past this level. And then we had the fourth daily candlestick right here, closing as a momentum candlestick, a bullish momentum candlestick, engulfing the very previous daily candlesticks from the level. And then this is enough confirmation that the buyers have pretty much stepped in to the markets. And currently we are having to see the buyers dominating. From this level, we are most likely going to expect more buying pressures to kick in. And now, as you know, I don't take my trades from the daily time frame. Having gathered every one of these confluence from the daily time frame, this is where I move down to the lower time frame for my trade entry execution. And then moving down to the 4-hourly time frame, this is our daily area of interest, like we have identified previously. Just in a bid to add up to the previous confluences from the daily time frame, what I quickly noticed upon reaching the daily area of interest on the 4-hourly time frame is one reversal pattern I love to see, one reversal setup I love to see, and that is the concept of divergence. Introducing the awesome oscillator indicator. Now we came right into our daily area of interest, our identified daily area of interest, and then we'll get to see at this level when we printed lower lows, we are having the awesome oscillator indicator printing us higher lows. So we have a lower low right here. And then the reverse is the case here, higher low right here. And this is a perfect example of a bullish divergence, which as you know it is a one reliable reversal pattern. And then also from the daily time, from the 4-hourly time frame, you can clearly see we are having to see the 4-hourly time frame is in an uptrend also. It's very clearly in an uptrend. So we have the daily time frame in an uptrend. We have the 4-hourly time frame in an uptrend. And having these two time frames in sync puts the odds more in my favor, looking out for buying opportunities in line with the daily time frame directional bias. And then also we had noticed at the retest of the daily time frame area of interest, we had ourselves a bullish divergence, indicating that a price reversal is imminent. Also, right at the level from the 4-hourly time frame, I'd identified more like a 4-hourly point of interest also, just within our daily point of interest. You noticed we had price as you can see, we had price come into this level right here and then acted as a support on 2 occasions. And when we were below the level on 3 occasions, you can see how the level acted as a resistance 1, 2, 3 times. This automatically makes this, for me, an area of interest also. So clearly I identified a 4-hourly area of interest just within the daily area of interest. And then again, if you pay attention to the price action at this very level, what you'd get to notice was the fact that upon reaching our daily area of interest, also we add ourselves more like a mini inverse head and shoulder pattern, which, as you know, it is a reversal chart pattern. It's a bi-reversal chart pattern. So we have this being the left shoulder, the head, and then the right shoulder. So we add this, and then with the right shoulder here, clearly what's giving us an impulsive movement that created the higher high at this level. With this being the swing low that led to that higher high. So we have clearly now seen price watch broken above our 4-hourly key level. As you can see very clearly, for every of the times we were above the level acted as a support right here, and this second time as a support. And now we're very clearly above the level. Safe to say, for any time price retest this level, we would be expecting this level to act as a support also, because now we're above the level. Also, clearly, we add what? An inverse head and shoulder pattern with price breaking above this level, also being the neckline of our inverse head and shoulder pattern. And then, of course, if you pay attention very clearly to the price action at this level, you would see a second head and shoulder pattern right here. With our potential right shoulder forming from where we had our buy opportunities for longs here. So there were too many convincing reasons why we had to be looking out for selling opportunities from this level, because every indication had pointed that the reversal was quite certain for a fact to take place. Now you can see how this pattern right here looks very similar to what we're having on the daily time frame. We had ourselves this, and then the head with our potential right shoulder, aligning also with our daily area of interest. So you can see, even right at the daily time frame, we had ourselves a nice reversal chart pattern where we had the price retests come right into our area of interest, which is also the potential right shoulder. And as such, I was expecting for price to come into this level, in the fact that also on multiple occasions we've had to see price react off of the level. So the level acted as your resistance right here, also as a resistance. And then level also has a resistance here. So I was anticipating for the potential right shoulder to take off from this level and then come into our daily neckline where I had my take profit set for this buy trade opportunity right here. Even though currently I'm very much hoping for a daily time frame close above this level and then a retest or even more potential buying opportunities to the upside. So when once I have myself a very LD daily candlestick close above this level, I'd simply wait for the retest. With this being the neckline of a daily inverse head and shoulder pattern, I'd wait for a retest at this level to get in on further buys to the upside. I'm currently out of my buy trade. Sorry, I had to digress. Moving back to the 4-hourly time frame. Like we had identified also, so we had clearly price breaking above our 4-hourly area of interest, being a key level. Also with the level aligning perfectly with the neckline of a small inverse head and shoulder pattern where I identified at the bottom here. And also with the level aligning perfectly with the potential right shoulder of this inverse head and shoulder pattern, as you can see right here. And then lastly, as soon as I saw price heading back to this key level, the identified 4-hourly area of interests, bringing in the Fibonacci retracement from previous higher low, so the most recent higher high. Then again, you can see how this very same level being our 4-hourly area of interests aligns again very perfectly with the 61.8 Fibonacci golden reversal level. And then, of course, as soon as we had price rejected this level with this 4-hourly rejection candlestick, I knew for a fact the price was ready to start making that impulsive move to the upside. All I needed was the next 4-hourly candlestick to close as a momentum candlestick, which did happen right here. You can see we're having ourselves a 4-hourly bullish engulfing candlestick, and that was my entry signal for long. As soon as we had the 4-hourly bullish engulfing candlestick, I had my entry signal for long. My stop loss just beneath the low of the 4-hourly rejection candlestick. Then, just like I had identified from the daily time frame, my take profit target was the neckline of the daily head and shoulder pattern. And you can see how every one of the confluences played out so perfectly well, giving me a very high probability buy trade setup right here for a nice 1 to 5 risk to reward. So yeah, that's it, guys. I do hope you find enough insight in this video. You can do yourself a whole lot of good to go over this as many times as possible just to get a grasp of the strategy in details. Do well to click the like button and then subscribe to the channel for more insightful videos like this. Thanks for staying till the very end. See you in the next video, guys.